U.S. truckers experienced a peculiar surge in activity right after President Trump's tariffs were implemented. It was all about companies trying to get ahead of the duties.
They stocked up on goods like auto parts, appliances, and sneakers.
This created record volumes for truckers in early 2025, even surpassing pandemic peaks.
Dean Croak from DAT Freight and Analytics pointed out that this tariff avoidance was the main driver.
However, this volume surge was masking a more concerning trend.
The underlying demand from key sectors was actually deteriorating. Domestic manufacturing, a huge driver for trucking, was starting to cool down. Ocean imports were also showing signs of decline, so while things looked good on the surface, trouble was brewing beneath. It's like a sugar rush before the crash.
The initial boats from tariff avoidance didn't last long. The trade war started taking its toll on the trucking industry.
Manufacturing shipment demand began to cool off significantly. This is a big deal because manufacturing accounts for over 60% of big rig ton miles.
Ocean imports also started declining as companies paused orders from China due to the high tariffs.
The overall outlook for U.S. trucking started to look bleak, as Croak mentioned. Things have turned south in a Murray with this trade war that's emerging.
The forecasts for 2025 reflected this downturn, predicting flat year-over-year volume with only minor rate increases.
The spot rate for a semi-trailer of goods was only slightly up from the previous year, indicating weak demand and pricing pressure. All indicators are pointing to a bumpy road ahead for the trucking industry.
The tariffs are really squeezing trucking companies. Many were already operating on slim margins before the trade war even started.
Now, with escalating operating costs and intense competition, it's getting even tougher.
J.B. Hunt CEO Shelley Simpson noted that rate increases aren't keeping pace with the rising costs.
This puts a lot of pressure on their profitability. Knight-Swift Transportation Holdings CEO Adam Miller mentioned a more cautious tone among shippers due to the fluid trade policy.
They are winning rate increases in some new contracts.
However, this trend is at risk if volumes remain weak and spot rates stay low. It's a precarious situation where companies are struggling to stay afloat. The uncertainty is making it difficult for them to plan and invest in the future.
The tariffs aren't just affecting trucking companies, they also threaten to create product shortages for consumers.
Many businesses have been canceling orders for products from China.
This is because of the high 145% tariff on most Chinese imports. The number of freight vessels scheduled to arrive at the port of Los Angeles is projected to drop significantly.
This decline in shipments raises concerns about whether retailers will have enough goods in stock for the upcoming back-to-school and holiday seasons.
Jonathan Gold from the National Retail Federation emphasized the challenge retailers face in ordering and pricing with all the tariff uncertainty.
They're making their holiday buying decisions now. The supply chain disruptions could lead to empty store shelves and limited choices for consumers. We might see a return to the kind of shortages experienced during the COVID era.
The impact of the trade war extends beyond the trucking industry and retail sector. The U.S. manufacturing sector contracted in March after a brief period of growth.
This is a concerning sign for the overall economy. The tariffs are also putting downward pressure on the housing market.
U.S. home building is at risk of a downturn due to weakness in single-family permits and starts.
Furthermore, transport stocks have been suffering, reversing their gains from earlier in the year. The Dow Jones Transportation Average Index has declined, while the S&P 500 has seen a drop.
China's retaliatory tariffs on U.S. goods, including beef and other exports, are also hurting American businesses. The trade war is creating a ripple effect throughout the economy. It's impacting various sectors and raising concerns about future growth.